Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading for law. It's Tuesday, June 9th. All right, we're back at it again. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, we ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. Can the church say amen? Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down at the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And at I'm the Trader Capital, our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At Am the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going into this week is 3%. As always, mental check-in, generally okay. A lot going on up here, but generally I'm okay. All right, I'm excited to see what price action has in store for us today. Excited to continue to grow, all right, and get 1% better. Another week back in the markets. As you can see, looking at Econa Day, right, I'm on the right calendar, yeah. Monday, there was no news, all right, so pretty much it wasn't an optimal day for me to trade. So I just decided to take it off, all right, have a day off, a mental break from the markets, all right, and just, be one with myself. And yeah, pretty much just took the day off because it wasn't an optimal day. I could have obviously showed up to a tape read, but for me, I was okay just being off for today. But anyway, we digress and we progress, all right? I acknowledge any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is Tuesday, June 9th, all right? We had high impact news come out at 8:30. We have another one coming out at 10 a.m. today. So we have news today, making it an optimal day to take a trade. The remainder of the week it will be optimal days to take a trade. It's just Monday that we didn't have any news on that day. The only exception is NFP Mondays. If there's no news, we'll still take a trade, all right? But as you can see, NFP was last week and it's done. So yeah, no news on Mondays means on any day, meaning it's not an optimal day for us to trade. Okay, so that's how we determine when, all right, we're going to take a trade. Okay, using medium to high impact news. Risk going into today, we're at 0.25 of account size, and we have a max of 0.75 per account per day. I'm still working on it. I'm going to increase it soon enough. As capital grows, I'm going to increase it, but for now, that's where we're at. Weekly program going to this week. Let's go ahead and review, since we have Monday's range, we can go ahead and review price action overnight to establish if we have a weekly program or not. So let's dive in. Let's dive in. I missed the markets over the weekend. Not gonna lie, missed the markets over the weekend. Hold on. Let's go on a 1 hour for a look a bit real quick. Let's get Mondays. Close call here. The high of this is 743. High of this is 748. So we have taken it. So we've taken Monday's high. Okay. So we've established our weekly program as a buy program going into this week. Okay. Until price comes and takes Monday's range low. All right. Which will flip our bias. But for now, until then, all right, we're in a buy program until Monday's low is taken. So let's go ahead and adjust our higher time frame dealing ranges. This is now 20-day low. Relative equal lows below price here into this daily inefficiency. We've got this inversion. We also have a daily inefficiency up here. I believe I have previous weeks Where's previous week's low though? Oh yeah, it is here. Okay, cool. Just in previous day. Trying to see if we took previous day high already. 743, 748. So we took previous day's high already. All right, so if you were using previous day's range to determine your condition coming into today, all right, you'd be in a buy program which is in alignment with the weekly program. Okay, so just ranges, high time frame ranges to be aware of, all right, that we're looking at. We also have this 4-hour inefficiency nested inside of the daily, so we're watching how price gravitate towards consequent encroachment of this daily inefficiency here and potentially into the 4-hour here. Okay, but yeah, that's our higher time frame weekly program established. Let's continue. Different week, different day, different session, same processes. All right, nothing changes. Step one. I looked at price action yesterday. Saw some few decent setups here and there. All right, back tested it, liked what I saw. It's trading edge Tuesday as well today. So we're going to be digging deeper into our model, processes, procedures and protocols, understanding the market. Anywho, step one, condition. If you're not already using previous day's range, because if you are using previous day's range, your condition would have been established already as a buy program in line with the weekly program. For me, I use current price action for the day to determine my daily condition. So I'll go from 12 a.m. to current price, note the lowest low to highest high, gives me my dealing range, and I'm just waiting for one side of that dealing range to get taken to establish a condition. Right now I'm going to note buy side and sell side above and below dealing range, so I can get a gauge of potential draws on liquidity once one side is taken. Above dealing range, we have AM session buy side from Friday. I did put the 3 days highs and lows to see if it'll help me out here. Below dealing range, we have Asia. I can't speak right now. Asia session sell side. And obviously, should we need anything more below that, I'll go ahead and draw it out. But for now, we're good on those sell sides and buy side. Kicking off, 9:30. We are kicking off. Decent size open range gap, so I'm happy about that. All right, excited to see what price action has in store for us today. We should have some decent price action. It's a good trading day. All right, that also determines whether it's a good trading day for me based on the data that I've collected. Okay, making sure the mic is on because that's a new feed I unlocked. Open range gap is below price. Okay, so we gapped up, so we have a premium gap up. Why is it not finding it though? It's completely like not finding this thing here. Okay, hold on. This is the week that we will be engaging in 15-second setups. Alright, so see how it goes. It's not picking up my PowerPoint here. I have no idea why. It's not doing that though. Okay. But this is not the one I want you to pick up though. This is not the one. Not the 2, not the 3. Nothing for me to do here on the charts right now. Okay, waiting for a condition, step 1. For one side of the dealing range to be taken to establish a condition. Nor are we at any price point levels that I would be interested in. Previous day high up here, I would be interested in it, but nothing right now for me to do. So I'm trying to figure this out. Why it ain't doing it? Why is it not picking them up? You know what I mean? It did get some shy this weekend, so and I had yesterday off too. I gave my computer yesterday off too, so there's no way it should be, you know, not well rested right now. No bloody way. Hold on, let me set my alerts. It should be well rested right now. I just don't know. I just don't get it. I just don't understand, you know. It's just not finding it. What I need it to find. I don't understand why. Trading Edge Tuesday, where we're going to build extra confidence in your trading edge. When this thing can find itself, it don't seem to be working, so ooh, what is the next step? Look at what we done to the world. I just don't get it, man. These technology stuff just be mad jarring, dog. They be annoying as hell. Annoying. It's not finding none of my keynote stuff on here, really and truly. Don't know why though. Yep, there we go. Yeah, buddy. Good job. Good job, buddy. Good job, buddy. I'm not your pal. I'm not your guy, friend. I'm not your pal, buddy. Good looking out. Thank you very much. Trading Edge Tuesday. Wait. Oopsies. Itching up to daily range buy side with the previous daily high. Let's see how it goes today. Trading Edge Tuesday. Today we're building confidence in your trading edge, right? If you saw the beginning of the stream, right? Confidence in our trading edge comes from three things, right? This is one of the three pillars, all right, that every trader needs to have in their trading business, right, to be successful. Okay. This is one of the three. This is the last pillar, actually. This is the least important pillar, actually. We do the first one. Money and mindset is the foundation, right? Then we have risk management, and then we have trading edge. Trading edge is the last pillar that we need to work on as traders, but it's the first one. All right, it's the first one we work on, or we try to master when we step into trading, step into this financial, trying to make money in the financial markets. That's the first one we work on, but it really should be the last one. Because it's the first one, all right, that's why I want to actually work on it, because that's where we all start. So let's start off right, when we come into this industry. Anyway, confidence in our trading edge here, I'm the Trader Capital, comes from three things, all right, and it comes from first understanding how the markets operate, all right, how money truly moves, understanding how money truly moves. And in order to do that, you have to understand the who behind money, right? Then you have to understand how the markets actually operate, why they do the things that they do, why these candlesticks print the way that they print. And there's a reason behind why they do the things that they do. Okay, we're going to talk about it today. Next thing, all right, is have one trading model. One trading model with IPTA signatures, all right? IPTA is the algorithm that delivers price from the central bank's level. We'll talk more about that today, all right? One trading model with IPTA signatures, that's very imperative. Must have IPTA signatures, all right? That you trust and you execute on a consistent basis, right? You start with one. If you want to add more, you can, but initially master one model, okay? And then you need a plan and a process, right? What are you going to do and how you're going to do it. Without a plan and process, you're simply just winging it, right? And you're reacting to price, all right? Successful trading is boring. When you see me do this, when you see me tilt my head a little bit like that to the side, whichever side, it means I'm checking to see the mic lights are on, because it's a new fear of mine. It's real, you know. These fears are real, bruv. But anyway, plan and process, right? Successful trading is boring, right? You're doing the same thing over and over and over again. Nothing exciting, all right? It should get boring at some point, right? Once you've done the refinement, and you're constantly doing the same thing, it's like another day at the job, right? You show up, you're looking for the same thing, you're doing the same thing, and the outcome's out of your hands. You do that, your job's done. You go home, you come back the next day, you show up, you're looking for the same thing, you're doing the same thing, same processes you're following, get the job done, go home. Over and over again. There's no excitement here, right? No excitement whatsoever. Oh, I didn't want to edit this. Hold on. Da-da-da-ba-ba. Oh, something is slowing down my stream here. When that thing starts doing that thing that you be seeing on your screen, it means something is going on here. Something's slowing me down. I've closed like majority of my shit here, you know. What to do about you. All right, we're back up at previous day's high. Taken dealing range buy side. Our condition has been for the day has been established as a buy program, which is in line with our weekly program. Okay, so everything is saying buy, 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 buy. Everything is saying buy, buy, buy. So how can we be a buyer of this market today? Doesn't mean we can't sell, all right? But our main role, our main job here is to be a buyer of this market. How can we jump on board on the train and buy this market today? It's what we're looking for. Because that's what our condition is saying the market wants to do. Until proven otherwise, we're going to elect to stick with that. Like you said, above price. Okay, we got Friday's AM session AM session buy side above price. That was our draw up there. Da, 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 ba, ba, ba. Nothing yet. All right, for continuation setup right now, since it is trading edge Tuesday. All right, for continuations, we can actually dig deeper into the setups today. Okay, for continuation setup, I'm waiting for continuation meaning a buy, right? How can I jump on board on the buy program? I'm waiting for price to drop below external liquidity, which is previous day's high and open range dealing range buy side right now. Okay, drop below that external liquidity into an inefficiency, okay, or liquidity, right? If the moves for two reasons, right? To seek liquidity above and below price and to reprice into any inefficiency above and below price. We'll dig more into it when we get back into the PowerPoint presentation today. But IPTA signatures, right? One model with IPTA signatures, right? Those are the two IPTA signatures and they're included in this one model of mine. So I'll be waiting for price to drop into any inefficiency or liquidity below external liquidity, and then a market structure shift back above that external liquidity will confirm a continuation setup for me. All right. For retracement setups now, right? I want to see buy side taken above the external liquidity, short-term high taken above the external liquidity, and then the market structure shift back below the external liquidity. Okay, that will confirm a retracement setup for me. So right now, nothing for me to do right now in terms of my models and what I'm looking for in price. Let's go ahead and note all the inefficiencies below external. We have this busy here and we got this busy here. It's going without us right now. Didn't give us the opportunity. Didn't give us the opportunity. Nothing we can do about it. If not, we wait till 10 o'clock, all right, for open range to be complete. Get that open range, dealing range, and see what that's saying. But for now, nothing for us to do right now. Nothing to talk. We just chilling. All right, so understanding how the market operates. Oh, this thing is lagging like a motherfucker. It's lagging bad. I don't know how to fix it. Me not know how to fix it. Me not know. Anyway, back to understanding how the markets operate, right? How do these markets operate, right? And it doesn't matter the asset class or the market we're talking about. Okay, we're talking about the market as a whole, right? This is how they operate. It doesn't matter if you're looking at stocks, if you're looking at futures, if you're looking at forex, if you're looking at commodities, or crypto, even if you're looking at that, right? This is just how the market in itself as a whole, right? The algorithm as a whole, from the central bank level, the who behind money, right? This is how it operates, okay? So in order to understand how the market operates, like I said, you must first understand and know the who behind money, right? Which we talk about during Money and Mindset. And we all know that the who behind money is central banks, all right? The concept or the thing that we know as money is their commodity, all right? It's their asset. They own it. They set the price of it. They control it, okay? And how they control it is through the open market, buying and selling government bonds, all right? So they're in here, all right, controlling the economy through buying and selling of government bonds, right? So when they buy government bonds, it means they're injecting money into the economy. And when they sell government bonds, they're taking money out of circulation, all right, in the economy. That's how they, and obviously they're also in charge of interest rates as well, okay? So that's how they're controlling the money. That's how they're controlling the economy as a whole in the open market, buying and selling government bonds. So once again, control, right? Control is the most important word here. Control, right? Is their asset, is their commodity. They control the price of it, okay? If you owned something, right? It's your commodity, it's your asset. You get to set the price of it, right? If you, let's say this first, you own this box of Fruit Loops, right? And you control it. It's yours. It's your asset, right? If you want to sell it, all right, you sell it at the price point that you want to sell it, right? Nobody's going to tell you what price point to sell it at, right? If you want to charge $15 for this box of Fruit Loops, you charge bloody $15 for this box of Fruit Loops, right? Simple. Does that make sense? You get that? All right, we on the same page? All right, so once you know the who behind money, right? Now, we have to understand the market efficiency paradigm. Hold on. $9.50 macro kicking off, all right, but we have time, but no price yet, all right, so still nothing for me to do here. Just patiently waiting. I'm not trying to force anything right now because really there's really nothing for me to do, really. I'm not eager to get in the market, right? I'm just waiting for my setup to present itself, and when it does, I'm pulling the trigger, all right? So there seems to be a disconnect between people's thought process about how the markets operate and the reality of the market, okay? To understand the charts and how these candlesticks move, you first have to understand the market. Not first, right? Secondly, this is second, all right? First, you have to understand the who behind money. And then you have to understand the market efficiency paradigm, okay? This was a game changer for me when I understood this, all right? When you first grasp this concept, right, everything just opens up. It's like Neo taking the red pill and seeing the matrix for what it really is, right? It just you just start seeing the market, these candles truly for what they really are, and it's a beautiful beautiful thing to see, all right, and see it occurring every day, day after day after day, and just like it was game changer, right? You start to realize that this is a zero sum game, right? It's a zero sum game, meaning for someone to win, somebody has to lose, right? For somebody to lose, somebody is winning on the other side, right? There's always is a zero sum. That's what zero sum means, right? For someone to lose, somebody has to win. For somebody to win, somebody has to be losing, okay? As traders, investors, and speculators, right? When we first come into the market, when we're introduced to the market, we're made to believe that we control price, right? That is our buying and selling pressure that makes these candlesticks, these markets move up and down. This is not true, okay? This is not true. It's got nothing to do with us, right? It's like we're like freaking small fishes in a big ocean, right? We have no control over these candlesticks and how they move, right? It's not our buying and selling pressure, right? Even if you get the whole world, right, to pile in on buying one commodity, one asset class, right, it's still not going to make a difference. It's still not going to be a dent in the market, okay? If they don't want the market to go one way, it's not going to go that way. Simple as that, okay? We have no idea, right, of this entity, smart money, this small group of people, right? We have no idea that they even exist, but they are the liquidity provider, right? And you and me and everybody else in here in speculative uninformed money, we are the liquidity, all right? We are the liquidity. This small group of people, all right, called smart money, central banks, right, and the people in the know, right. There's central banks and there's people in the know as well that are part of this small group of people called smart money, and the market is efficient for them, all right. It's not efficient for us, all right. It's just for us to understand here that this big group of people here in that big circle that you see, where we think we're the ones, driving the price, driving these markets, we're not. It's really the small group of people that draw no attention to themselves behind the scenes, all right, controlling these markets, okay? To get on the side of the smart money, right, there has to be a shift in your thinking. You have to understand that these markets are only efficient for smart money. The central banks, all right, they drive price, they set it, they control it, right? Small group of people right there, right? The markets are controlled, right, to the smallest degree, right? It's their commodities, their asset, right? So they can set the price of it. They control it. All right. So we're coming into an inefficiency here, back below external liquidity for the 15-second time frame. This is the short-term high market structure shift that I want to see go for me to be interested in a continuation here. And for the 1 minute, this is the buy side. Oh, what's the high of this? This would be the buy side I'll need to see go. Okay, so now we've taken, bear with me here, we've taken liquidity below external liquidity into we came into an efficiency and took liquidity below, all right, the external liquidity. Now this is the high. What's the high of this? 7.5. That's the high that needs to go for me to be interested here in a continuation setup, right? Did I long, right? That's long. Let me no sync this. Even though it's below dealing range high, it's above previous day's high, okay? So it's still above an external liquidity. But those are not for me right now. Those are not for me right now. Nothing for me right here, right now, in this price action. Came to standard deviation of open range. Wrong. Dealing range, sorry. Dealing range. Too many ranges. Open range ain't confirmed here, my guy. Relax. Yo. Above midnight open. Cool. See how price gravitate towards consequent encroachment of open range gap here. Open range spot to be confirmed in a minute. And give it to us, okay? So nothing for us to do here so far. We can get rid of that. No, this doesn't count. This doesn't count because I need that 1 minute here to close. So, and it still didn't even like, look how delayed that was. That's how I know something's wrong here. It's very delayed. All right, we have open range confirmed. I'm not even sure if you've even given me a contract here. Just about one. 15 minutes there. Why is that not showing it though? Hold on. And that is why I don't, it's not showing on there. Okay. Makes sense. Grand Rising. Haven't heard that in a while. So far, still nothing for me here. Where was I in this presentation? I think the markets are controlled, right, to the smallest degree. It's AI, a computer program that delivers price. Okay, this is wonderful news for you and me, all right, because this means that it can be identified and it can be tracked because it's following code, all right. When you're able to do this, right, track and identify IPTA, right, that's when you're able to shift from the realm of speculative uninformed money, the big group of people here that think that they run price, right? And then you're able to join the smart money, who the markets are efficient for, right? It's only efficient for smart money, not for speculative uninformed money, okay? So everything that you see here is being controlled by an AI, all right? It's computer program, it's following code. If this, then that programming, and that's what this IPTA is following, all right? Which is, like I said, is great news for us. That means that it can be tracked and identified, so we can, obviously there's a language it's following. So once you understand and you learn that language, right, you get to see exactly why these candlesticks print the way that they're printing and potentially where they could be heading to next. Okay, so like I said, it's a beautiful thing once you see it, and you see it consistently, and it just you become numb to seeing it again. Okay, so take the red pill with me today. Take that red pill with me. Let's just step into that matrix real quick. All right, let's see what's really going down up in there. Take that red pill with me. You too, man. If you take a trade today, happy hunting. Happy hunting. hunter-gatherers. All right, we are hunter-gatherers. My job here is to hunt my setup. If I see it, I'm going to be ready for it, you know. So the AI, right? The AI, the computer program that delivers price, right, from the central bank level, right? From the central bank level is called interbank price delivery algorithm, short IPTA, right? IPTA only moves for two reasons, all right? She only moves for two reasons. Hold on. I'm still on this. I'm on a PowerPoint and I'm talking. I'm doing all this yabba, 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 yabba. And you can't even see what the hell I'm yabbering about. You know what I mean? So then I can do this a little bit. So we can kind of see what's going on here. So IPTA only moves for two reasons, right? She moves for two reasons. One is to seek liquidity above and below price, all right, accumulate, all right. And two is to reprice into any inefficiencies above and below price, reaccumulate, all right. If it's not doing one of these two things, right, it's consolidating, meaning it's stuck in a range, all right, it's just range bound, all right. But these are the only two reasons why IPTA moves. These candlesticks are moving for two reasons, all right, and these are the two reasons: to seek liquidity above and below price, liquidity in terms of short-term highs and short-term lows, session highs and lows, daily highs and lows, weekly highs and lows, monthly highs and lows, time-based highs and lows, all right. Like we have our 20-day look back, 40-day look back, 60-day look back. Okay, we're about to smash a dealing range sell side. All right, taking dealing range sell side. It was delayed, but it was quicker than before. All right, so our session bias has been established as a sell program going against our daily bias and our weekly bias. Okay, let's be aware. For a reshape entry, I'll need price to displace with no riff raff price action into that buy side for me to be interested in a retracement setup here. Looking like we're heading to dealing range sell side as well. We haven't taken it yet though. Ooh, I think, yep, taking dealing range sell side. So we had the retracement from buy side to sell side. This flips our bias, right? From a buy program for the day to a sell program, which is currently in line with our session program, which these two are going against our weekly program, okay? Just to be aware of what's going on and what the price action is saying. It ain't giving me the opportunity here, okay? So there's been nothing for me to do really. It's moving without me, it's moving without me. Like I said, I'm here hunting my setup, and if I don't see it, nothing for me to do. Now we do have these two inefficiencies. If price comes in and we have a market structure shift back below the external liquidity, I would be interested in a continuation sell. But for now, we sit still and we do nothing. We sit still and we do nothing. Below price, okay, we have Asia session sell side. Yeah, I won't be because it's fully outside of the macro here. Now my stop would have to include this fair value gap up here, okay? Did it come into it? I'm not sure if it came into it. Let me just confirm. The low of this is 578.50. High of this 578.25. No, it doesn't go into it. Doesn't go into it, so nothing for me to do there. But I do see a 15-second outside of my macro time frame though, so I'm not that much interested in here. I'd rather watch it. Took buy side above external liquidity, market structure shift back below it. I'm watching it, but for me personally, nothing that I would engage in. Nothing that I would engage in for me personally right now. Worth watch though. Worth the watch to see how it plays out. Would have been this market structure shift right here. Just seeing. Collecting the data. 2 off here, 1 off here, so we'll be out at negative 1.5 right there. Cute. Coolio. Yep, so if it's not doing one of these two things, all right, seeking buy side liquidity and sell side liquidity, all right, is repricing to any inefficiency imbalance in price, okay, like you see on the chart. And if it's not doing one of these two things, it's consolidating, meaning it's within a range. So understanding these market movements, all right, gives you an edge over uninformed traders, right? So the fact that you know this, right, gives you an edge over uninformed traders, right? Look for areas where price hunts liquidity or moves to fill inefficiencies, right? When I talk about have one model that has IPTA signatures, this is what I mean. These two IPTA signatures, including liquidity and inefficiency, okay? Because that's the only two things that is seeking in these price action, right? Liquidity and inefficiencies. And now, hold on. I'm going to edit something here so that when we talk about it, just for visual representation as I'm running my trap, because I understand, some people are visual learners and they need to see what I'm talking about for it to click, right? For both to make sense. Market is going without us. It is what it is. And next thing, right, to build confidence in your trading edge is have one model with IPTA signatures, which we just talked about, as technical traders, all right, we only need one setup, one pattern to trade on. All right, it's important to know that each and every trading model will lose, or it will take a loss. All right, you just have to accept it. Losses are the only thing promised to us in this industry. Okay, there's only two things promised: a loss and a series of losses. Okay, those are the only two things promised to us in this market, in this industry, on this battlefield. You're going to get cut, right? You're going to get cut. It's about managing that cut, right? And how many times you get cut, where you get cut, right? The goal is to find your unique model here and just grow with it, all right? Refine it, grow with it. But just understand that either way, right, you're going to take a loss. I'm trying to see. Yeah, no, it doesn't come into it. 7825 is not higher than 50, so yeah, nothing for me here. We can go ahead and delete this for now. Delete this for now. Now, if this was you, right, and you just saw everything that happened this morning and you weren't in this mood, would you feel some type of way? Because I don't. I didn't see my setup. I didn't see my model. There's nothing for me to hunt here in this price action. Nothing at all. Nothing for me to do here right now. Waiting for 10:30. Waiting for 10:30. Ow, 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 ow. I'm okay. I'm okay. I'm okay. Those big ones aren't for me though. So one trading model, right? One trading model that has if the signatures, right? Either is seeking liquidity or is repricing into an inefficiency, right, into a fair value, all right, then to continue in a direction or to reverse, right? Success comes from consistently applying a proven setup, right, rather than chasing different strategies, all right? That's something that we all go through when we're first initiated into the financial markets, into trading. Okay, we think is the strategy is the reason why we're losing, so we strategy hop. And I did this, right? I went through so many damn freaking strategies. Oh my goodness. until I found my mentor and obviously understood better how these markets move, right? And then I started following, tracking IPTA, and now I feel like I have a good understanding of what she's doing and where she's going, all right? Obviously, there's more for me to learn, more that will come with time and experience. But for now, I feel like I have a good understanding potentially of IPTA and what she's doing, why she's doing the things that she does, and potentially where she could be heading to next, right? Our draw on liquidity is Asia session sell side, so I'm seeing how price gravitates towards that, right? Seeing how price, since we took dealing range sell side, okay, we went from buy side to sell side. We have a retrace to reverse scenario here, okay. So once one side of the dealing range is taken, price can either do two things. It can retrace, right, back inside the range and then continue in the direction that it took, or it can retrace to reverse, right, taking the other side of the range, which at that point flips our condition, right? We'll flip our condition from whatever program to the other program. So here we initially established the buy program in line with our weekly program, but then obviously we have a session sell program which confirmed a daily sell program as well. Okay, so currently in a sell program going against our weekly program. Okay, until we take Monday's range low, which is down here, until we do that, all right, for the week we're in a buy program, but for the day and the session we're in a sell program. So now that we've established step one, right, we're just waiting for step two stage. We have two types of trades that we can get in. Okay, two types of trades. We're talking trading models here, right? We're talking trading models. William is a plan posted by store the model, right? We're talking about the model. Two types of trades, right? Two types of models, right? We have a retracement and we have a continuation model. We have a retracement model and we have a continuation model. Yeah, that will need to be, I need like visual representation of them, right? Anyway, so you want a model that either includes liquidity rate, which is running stops, all right, or inefficiencies, which is fair value, all right, coming back into a fair value and then continuing price. Yeah. Oh, there's more. Why did they just dim the light though? So these are the different models, right, that you can have in price. Different models, right? Pick one of them. Or there's really two. There's only two models, really and truly. These are the same. These are stops, all right, and this is inefficiencies. Okay, so we have stops and we have inefficiencies. Liquidity, inefficiencies, right? So you pick your poison, right? Or you can have a combination of two, which my continuation model does have a combination of the two, right? And or, right? It can be a stop run, or it can come into an inefficiency above that external liquidity, and or take liquidity, okay, for me to be interested in my continuation sell. We'll get diagrams as we progress, okay, and I work on this material and fix it and upgrade it and all of that, because that's still Oh, that's still something I need to do, right? Just be so much going on that I just forget. It's like secondary to me, to what I got going on right now. It's secondary. But next thing and final thing that we need to build confidence in our trading model, in our trading edge, okay? Not just the model, in our trading edge as a whole. Hold on, bloody hell. Is a plan and process. It's a plan and process, okay? It's the next thing that you need to work on or and have, right, to build confidence in your trading edge, right? You need a plan and a process. You need to know what you're doing. You need to have a plan for everything. If something happens, if this, then that, right? If this happens, this is what I'm going to do, and if that happens, this is what's going to happen, right? What are your processes and procedures and protocols that you're following on a consistent basis, right, to eliminate fear and greed, right? Eliminate emotions, right? Because we're trying to be like Ifta. We're trying to think logically, right, and do things on a logical side rather than an emotional side of things. Okay, so when it comes to trading plan, okay, we need a trading plan for your account, your risk management, and your trading edge, and your trade management. Sorry, my hand's itching. You know what that means? You know what that means? Coming into some new money. Bring it on! Bring it on! Bring it on! Bring it on! There you know. When it comes to your plan for your account, all right, it's like a business plan, right? Each account that you have needs its own plan, okay? Or you can have one master plan, right, for all your accounts, but you need a plan, right? You need a plan. You need to answer the next following questions, right, to establish a viable, I think, will be a viable plan for your accounts, okay? So how are you going to approach the market? How are you going to approach the market, all right? And obviously to the side, to the right, we have it's 10:30. All right, first hour of trading is behind us. All right, let's see if we have time, but no price yet. Okay, so nothing for us to do right now. Still, um, what's the goal of the account? What's the goal of this account? Right? What's the purpose? Right? What is it going to achieve? This account, this one particular account, or it could be the master account, right? What is going to be your monthly and weekly targets, right? What is your limits? You have to set limits for yourself, or you're just gonna overtrade, right? You're gonna overtrade. There's so many opportunities, but you don't need to be in all of them, right? Get your pound of flesh and leave the markets alone, pretty much, right? You don't want to be in the markets consistently, right? We talked about traits of a good money manager, right? Is limiting your frequency of trading and being content with enough, right? Those are traits that good money managers have, right? They're not constantly trying to put their money at risk in the market, right? They get their pound of fresh flesh and they're done, right? That's it. Don't be greedy. What asset class and market within that asset class will you be trading? Okay, for us here, we trade the futures market asset class, right? The asset class is the futures, right? And in within that asset class, we trade NQ. Right now is MNQ, but same thing, NQ, right? Within that asset class. Okay, so if you're trading stocks as the asset class, are you what stock within that asset class are you going to be trading? Is it going to be Google, Spy, whatever, or the stocks within that, whatever they got going on? And I don't know much about stocks really and truly. I know the obviously the main ones, but that's pretty much it. If you're gonna do crypto as the asset class, right? What market within crypto are you going to be trading? Is it Ethereum or Bitcoin? Those are the only two I know. Those are the only two I really care to know about. Obviously, there's so many other Bitcoins out there, so you do your own research, right? And whichever, if crypto is what you want to trade, right, you should know the market within the asset class, right? If it's going to be commodities, right, what market within that asset class are you going to be trading? Is it going to be corn, wheat, whatever the commodities are, right? I know the asset class, I just don't know the particular markets within those assets. If it's going to be foreign exchange, FX, if it's going to be foreign exchange, what market within that asset class are you going to be trading? Is it going to be GBP USD? Is it going to be Euro USD? GBP, or GPY, or what is it? GPY USD. I haven't looked at any of them since I switched over to futures. I haven't really like kept up with any other asset classes, which is for a bigger picture. I should be looking at them and paying attention to them, but for me, really, it doesn't impact my trading particularly. So I don't. It's just another extra thing. If I want to add into my arsenal, I can, but I don't have to. But yeah, if you're gonna trade forex, what market within that asset class are you going to trade? Right, that's the whole point I'm trying to make. Pick an asset class and master one market within that asset class. Right. Once you master one, just like the same with the model, master one model, and then if you want to add more to your arsenal, that's fine. But initially, you always want to master one thing at a time. Right. Master one thing at a time. Okay. And then what days and times will you trade? Right. What's going to be your business hours? For some of us here, all right, due to our time constraint and what we got going on in life, okay, we're not going to be able to be in this market all the time, right? So pick a time that works for you where you can have 100% of your attention dedicated to these candlesticks, okay? It doesn't have to be long, right? It can be an hour, right? It can be 20 minutes window, right? You can come back for the macros, look at what the macros is saying, and then, carry on what you're doing, right? It can be 20 minutes within that macro time frame that you're just looking to trade. It doesn't have to be a long time. I think most people think when we talk about day trading, it's like you spend hours and hours in front of the charts trying to find a setup, but that's not how it goes, right? You can spend 20 minutes and find a setup and be done for the day, right? Pretty much that's all you need. 20 minutes is the limit. There's the shortest amount of time that you can be in these markets and look for something to set up, all right, to occur in that macro time frame. Okay, so don't think that day trading is spending hours and hours and hours and hours and hours in front of the chart, right? Even if you have a 9 to 5 right now, all you need is 20 minutes. All you need is 20 minutes a day, right? And obviously that limits you in terms of the opportunities, but you will get the opportunity here and there. It's not going to be a consistent opportunity, but the opportunity will be there, right? So you need a plan for your account, okay? You need a plan for risk management, the holy grail of trading, okay? Your procedures and protocols, and when it comes to risk management, should ensure that no single trade or series of trade, the only two things promised to us, right, can significantly impact your account. Once again, capital preservation is our number one job here. That's one thing that we need to focus on, right? As always, capital preservation. Protect your capital, protect your capital. Live to fight another day, live to trade another day, okay? So you need to have a risk management blueprint. There's an example of what you can have, okay? It's not an end or be all. Risk management is where everyone's going to differ, okay, because we all have different risk tolerances, right? My risk tolerance is not going to be the same as your risk tolerance. So you need to obviously demo different risk management styles, right, to find the one that works for you, right? Usually, rule of thumb is that you don't want to feel no type of way. Once you take a loss, right, if you feel some type of way about that loss, if that amount is too much for you and your body starts, giving you signs, your body will let you know. It will tell you, hey, we're not comfortable with this kind of loss here, so let's adjust, right? Listen to your body, listen to your internal thoughts and how you're reacting to the outcome of your trade, right? In terms of when you're doing your risk management practices, when you're trying to gauge which risk management is best for you, okay? So if 2% is too much, right, risk no more than 2% of your equity. If you have less than 2 years of experience, 2% is already too much already. Stay at 1% and below, okay, and then work your way up to 2% as you build more experience and you collect more data, okay? So if 2%, you find that 2% is too much for you, then just reduce it. If 2% is, obviously you can handle 2%, stay at 2% until you still, you build more confidence in what you're looking for and what you're doing in price. And then you can increase that incrementally, but you don't want to go any higher than 3% per trade, okay? If you want to be a professional money manager. If you don't want to be a professional money manager, all right, you just want to trade your own money, obviously you do with that what you want to do with it. If you want to keep increasing, increase. But if you do want to be a professional money manager, all right, I wouldn't recommend going any higher than 3% risk per trade, okay? But obviously if it's your own money, all right, is your prerogative, you do with it what you want, but just be aware of your main job here, right? Capital preservation, okay? All right. Have a model that offers a 1 to 3 RR, which is not set in stone, but initially, all right, I would recommend a risk to reward ratio of 1 to 3 because that means you can be wrong 75% of the time and still come out on top, okay? You only need to be right 25% of the time. Obviously, if you have no experience, you're not gonna have a high win rate. So having a model that has a 1 to 3 RR mitigates that, right? It combats that win rate, not needing to have a higher win rate. Obviously, as you gain more experience and collect more data and know what you're looking for, get comfortable and confident in what you're looking for, right? You are going to increase your win rate, which means you can reduce that risk reward ratio, and essentially becomes not important. But initially, to start out with, I think is important to have that. After a loss, right? What are you going to do? You're going to cut leverage, all right? What are you going to do? Have something in place. Or after a series of losses, right? It doesn't have to be just one loss. Maybe after 2 losses, you definitely want to do something, right? You want to reduce the risk in the trade on your next trade, right? You want to reduce your leverage, right? That's why it's imperative to have, for me, I think anyway, I recommend 3 different leverages, okay? So you have your high leverage, medium leverage, and low leverage, and then you're just interchanging between those 3 leverages as you lose and as you win, right? You're resetting, okay? Also, after consecutive wins, right? Reduce risk, right? Because our job here, we know that there's only 2 things promised to us: is losses and series of losses. So our job here is to always be preparing for that loss, preparing for that series of losses, because it's gonna come. It's not gonna give us a warning when it's gonna come, just like a black swan event. We're not gonna get a warning that, hey, your series of losses are coming, so be aware. So we're always on guard, right? On guard, right? Preparing for the losses that are going to come. That's our number 1 job here, right? We're preparing for losses because we know that's the only 2 things promised to us, right? So we have to be on guard and we have to prepare for them. Even when we're winning, we are still preparing, we're still keeping the losses on the forefront of our mind, okay? All right. So yeah, so have a risk management protocol and system, right, that allows you to reduce your leverage as you're winning and as you're losing as well. Okay, so you're preparing mentally and preparing for the losses and series of losses that are yet to come. Okay, maximum 2 to 3 losses per day. Okay, this would obviously be dependent on your max risk per day. All right, so if your max risk is 1%, right, and you're risking 0.5%, that only allows you 2 losses on that day, right? But if you reduce that to 0.25, it allows you 4 losses on the day. So that goes interchange, right, intertwined with the max risk per day. So you need to have a max risk per day, per week, and per month. And then when you hit those numbers, all right, you're done. Just like when you hit your targets, your weekly and monthly targets, okay, you're done trading for the week, you're done trading for the month, and then you just wait for the next week, wait for the next month, and stay away from the market, right? Because you hit your targets, you hit your goals for that period of time, okay? And how are you going to manage in terms of risk wise your pro trend trades and your counter trend trades, right? Continuations are going with the trend, all right? So you're going to manage them the same way you're going to manage retracements out, which are going against the condition, right? Have something in place for those, so you're not second guessing when you're in the markets. When you get into a trade, you already know these things. You already know what you're going to do when you get to this point of the trade. You already know that if you take a loss, this is the next step for you, right? You have a plan. You're just following it each and every day, right? You're not second guessing. You're not making it up right there in the charts, because that's what brings in fear and greed when you don't already have an established plan and procedures and protocols in place. Okay, that's when fear and greed creep in, all right? And you start moving and doing stuff, silly stuff, right? And that's what causes 90% of traders to fail, okay? So lastly, for trading plan, you need a plan for your trade management, right? How are you going to manage your trades, okay? Are you going to manage your pro trend trades the same way you're going to manage your counter trend trades, okay? How are you going to manage them, right? What's going to be the differentiating factor between the 2 types of trades that we can take here, okay? Partials, are you going to take partials, or are you going to be a full pool trader, right? Partials meaning you as price hits your target points, you're taking something off, okay? But and yeah, that's what partial means. And full pool means it's either going to hit your stop loss or it's going to hit your take profit, right? There's no, in terms of partially and taking something else, it's full pool. You're in it full run, right? Full in, all or nothing really is what full pool means. All or nothing, right? You're putting all your chips into that pot, and you're either gonna lose the pot or you're gonna win the pot, and that's pretty much what full pool is. Stop loss adjustment. Are you going to adjust your stop loss, right? Whether you're going to be a full pool or partial trader, right? Are you going to adjust your stop loss, right? When price hits certain points, right? Are you going to move the stop loss, or are you going to keep the stop loss the same? There's something that you need to have in place, so when you do enter a trade, right, you already know what you're doing and you're not second guessing, right? If this happens, this is what I'm going to do. If that happens though, this is what I'm going to do, right? That's how you need to have your trading. That's how you need to have it set up, okay? So when coming in, all right, before you even enter the trade, enter the market, you already know exactly what you're doing, how you're doing it, when and why you're doing it, okay? Because that's what breeds certainty and confidence, all right? For me, all right, I use the fib too, all right, to help me with my trade management. Okay, as you've seen, I will take something off at the fib extensions, okay, and I'll adjust my stop based on the range where my fib is based on, okay, as well. So I use the fib too to help me in terms of my trade management. Now comes to our three-step trading process, all right, that we teach all our analysts here. I'm the Trader Capital. We already know these. I'm walking you through this three-step process live every session here. Okay, so it should be a bit redundant, the information here. Okay, but you need to keep hearing this information over and over and over again. Okay, because certain things will click at different seasons, at different levels of your understanding. As you begin to understand more of price, understanding how it moves, having a model, all right, and as you continue to hear this information over and over and over again, right, certain parts you're going to hear different information depending on the season that you're in, right? You hear what you need to hear where you need to hear it. Once you obviously do the work and get to a certain point, you start to understand everything and it will come together. So step one, all right, is condition, right? Right. Before we even do anything in the market, we need to establish what kind of condition are we in, all right? Smashing our draw on liquidity, Asia session sell side, smashing that. Didn't give us the opportunity to be part of the move, but it went to where we were anticipating it to go to. Okay, so yeah, that's just how the cookie crumbles. Sometimes it is what it is, isn't it? Can't be in all the moves. Below that, okay, we have London session from Monday. London session sell side. Should price want to continue lower. So we determine the bias, right? Are we in a buy program or sell program, right? And we have obviously different ranges that we can use to determine condition. It just depends on what kind of trader that you want to be. For me personally, okay, I use current price action on the day to determine my daily condition. All right, my weekly condition is determined by Monday's range. Okay, my session condition is determined by opening range, which is 9:30 to 10 o'clock. And for the PM session, is 1:30 to 2 o'clock. For lunch is 11:30 to 12 o'clock. Okay, so those are my session ranges, all right, that determines my session condition. Okay, you can also obviously use previous day's range to determine your next day's condition. Okay, so there's different ranges that you can use to determine a condition, but you wait for one side of those ranges to get taken will give you establish your condition. All right, if buy side is taken, you're in a buy program, you're looking to be a buyer for that day. If sell side is taken on the range, you're in the sell program, you're looking to be a seller for the day. Okay, doesn't mean you can't buy if sell side is taken. All right, just understand that will be a retracement set up and you'll be going against the trend, but we also understand that we can retrace to reverse, right? So that's always a possibility as well. And then we have step two. Once step one is identified, a step-by-step process. If you don't have step one, you cannot move on to step two, okay? So you have to have step one before you go into step two, okay? Then we have step two, stage. This is what sets up your trade and what does your trade look like, right? We have two types of trades. We can actually condition, we have a session, we have a daily, and we have a weekly condition. Okay, that's based on the dealing ranges. Okay, depending on, we just talked about it, right? So I don't need to go in. And what sets up your trade and what does it look like, right? We trade a time and price theory. Okay, we trade a time and price theory. So we're waiting for a specific time, right? In price, we're waiting for a specific time, and then we're waiting for a specific price level. Okay, and we're waiting for characteristic around that price level to tell us potentially where price wants to go to next. Is time and then price. Okay, without time we have nothing. Okay, but first we look at the economic calendar initially. That's what lets us know when to anticipate a setup, right? We look for medium to high impact news, right? And that tells us when to anticipate a setup. That's why every session before I get into the markets, this is the page that we start on, right? It lets me know where what days high to medium impact news are on, and those are my optimal trading days. As you can see, Monday we had no medium to high impact news, so it wasn't an optimal day for me to take a trade, and that's why I took the day off on Monday. Okay, that's why there was no stream on Monday. Okay, but as you can see, the remainder of the week, right, we have either high impact news or medium impact news, so we have both. Okay, making the remainder of the week optimal days to take a trade. So the economic calendar tells me when to anticipate my setup. All right, when is the best optimal time, day, all right, to trade. There is a time, right? Time and price. Time first, and then once we get inside of the market, right, we're in for a specific time, right? We have the macros and we have the 30s, right, to anticipate a potential setup to form. Okay, so what sets up your trade? We have two types of trades, right? We have two types of trades. Once the one side of the dealing range is taken, right, the market can only do two things, right? Retrace to continue. We always anticipate this, all right? This is external to internal to then to external, all right? Or you can retrace to reverse. This is what happens. This when this happens, it changes our bias, okay? Flips our bias, like we had today, right? We had a retracement to reversal, okay, which changed our bias from bias to sell program, okay? And this is external liquidity to external liquidity, right? These are the two types of trades. We have a retracement setup and we have a continuation setup. And then step 3, the final step, execution, right? Without step 2, there is no step 3, right? Without step 1, there is no step 2. It's in 1, 2, 3, right? We move on. As we get one step, we move on to the next step, which moves us to the next step. Execution, right? Can you execute? Has your entry criteria been met in a trade to execute? Execution also involves how you're going to enter, manage, and close that trade, right? It's not just that, hey, I'm getting into the trade and I'm done with execution. How you're going to manage and exit that trade is all part of your execution, right? For us here, I'm the Trader Capital. We have four entry criteria before executing on a trade, all right? Which is time, the most important aspect of our trading here. Okay, time, right? We wait for macros or post 30s, all right, to anticipate a setup. Time, key level, all right, that's the price, right? Time and price. So we wait for time, we wait for price to hit a key level, all right? And we're waiting a liquidity rate on that key level, which is the external liquidities that we have, okay? And we're waiting for price, right? Characteristic around price, waiting for a swing with displacement, all right, and a market structure shift back above or back below the key levels, which will let us know whether we're going to be in a retracement setup or a continuation setup. Okay, so these are 4 entry criteria before executing. Okay, obviously we have different types of entries, all right. Ones that you can obviously get in. For us here is a market structure shift, right? Once we get that market structure shift, we're getting in on that high, that market structure shift high. That's our entry, but we have obviously different entry types depending on what kind of trader that you want to be, what your eye gravitate towards in the charts. Okay, you pick what kind of entry you want to be. This is where you bring your own personality into the 3-step processes, right? The 3-step process is going to be a constant thing, but how you're using it, right, what you're seeing in the charts is where we're going to all differ, right? For me, I find it easier to just enter on the market structure shift 90% of the time. Price will give you an entry, okay, but obviously there's also different ways to enter the market as well. And how are you going to manage the trade, right? That comes with our trade management that we talked about. For me, I use the fib tool to help me manage my trade, all right, and how close my trade is obviously depending on how many contract sides depending on my risk allows me into the trade, right? Or allow me how many partials I get to take in a trade or not. I take 2 at the whole numbers and 1 at the 0.5s. Okay, so let's say I have 3 contracts. 2 will come off at -1, and the remaining 1 will come up at 1.5 if price gives me that. If not, then it is what it is, right? Pia, we can't talk right now. I'm working. Man's at work, you know. Me working, me working, me working. Came back into an inefficiency here. Market structure shift back below. Okay, because this in itself is a range, right? It's Asia session range. Okay. I see you. Inefficiency, market structure shift back below, continuation sell here. Here it didn't come into any inefficiency, but it did take liquidity above. I just didn't have time, so I wasn't confident in that entry point here. But let me see you though. Me see you. I see you. And it's post 10 o'clock, so yeah, that's valid. Cool. Preferred, right? Or it doesn't mean they're the only ones. I'll just have to do something in terms of risk wise when it's outside of the preferred time frames I want to be trading. But for now, we'll watch them, okay, and collect more data. Let them audition, like the 15 seconds did. Let them audition, right? Outside of our preferred time frame, which is post 30s and micros. Would have given us 2 contracts here. Would have been out a -1 right here. Just a little bit under 1-to-1. If you're looking for 1-to-3, it does give it to you. Coolio. Excuse me. So once you have a plan and process in place, right, that you're following on a consistent basis, this is the 8 steps that you need to follow to build your edge, all right, to gain confidence in your trading edge, okay? It's everything that we just talked about, okay, just in a step-by-step format again, okay? So first you need to understand the market and how it operates, right? We talked about it. First, you need to know the who behind money and the market efficiency paradigm, right? Those are how you understanding those 2 things, right, will bring you a better clarification on the market and how it operates, okay? You need to know your model. We only need 1 model as technical traders. We only need 1 model that has IPTA signatures, right? Either seeking liquidity or inefficiencies, right? Those are the signatures of IPTA, all right? So you need to know your model, have a written plan. We just went over the 3 things that you need to have a plan for, all right? Which is account, risk management, and trade management, okay? Then you need to follow a repeatable process on a daily basis, the 3-step trading process we just talked about, right? Backtest your model. Backtest your model, okay? Backtest your model. Go back into the price action, all right? Old price action. Hindsight is 2020, and that's how we learn. That's how we grow in these markets, okay? Came right at that standard deviation and turned around. Cool. Backtest your model, all right? Build more confidence. Understand the model. Gauge that actually how many opportunities that model gives you, and how many times it pans out or doesn't pan out. Is it even a worthwhile model to pursue, right? Because if your back testing is showing you that this model, it really happens once in a blue moon, and when it does happen, it doesn't really pan out, then that's not the model you want to be following, right? So that's how you gain a better perspective of your model, and if it's gonna make sense walking it forward, right? You look at it based on old price action, right? Backtest the model. I would recommend at least 3 months of data, at least. The latest 6 months preferred, but at least 3 months of data. Then you want to forward test that model in real time, right? We're not pushing any buttons, all right? You're not even trying to get into the trade. You're not even demoing here, okay? You're just watching the price action, anticipating your model, and seeing how price behaves with that model, right? How that model pans out in real time, watching price action, okay? Then I would say at least 3 months, but you want 6 months of that as well, okay, of data for that. Then you want to demo trade with discipline. This is where we bring that risk management blueprint into place, where you're testing different risk management to based on the model, right? To understand where what your risk tolerance is, what you can take and cannot take, right? Here you pay attention to your physical body and what your body is telling you, right? If your heart starts racing once you start to see like how much you're losing or how much you're in the trade with, then you need to reduce your risk, okay? Go down, reduce it, okay? So then you want to demo trade with discipline, following the same model, following your procedures and protocols, your processes, all right? Doing the same thing over and over and over again, right? Build that confidence, build that discipline muscle, okay? You want to do another at least 3 months of this, but I recommend 6 months, but at least 3 months of demo trading as well, okay? Once you have all of this under your belt, then you can go live with confidence, whether that would be obviously scale Thursdays, we talk about this, whether that would be excuse me, whether that would be in terms of a funded account, your own account, self-directed 401k, or hedge fund, okay? However you want to scale, go live with confidence, okay? And these are the 8 steps, right, to build your edge. And nothing here for us still, okay? Nothing here for us still, and that's okay, right? That is a-okay. We got a lot of lows below price, a lot of significant lows. We got 20-day low, we got previous week's low, we got previous day's low. A lot of lows here. Oh, that's no, it's a weekly open. Sorry, yeah, weekly open. If there's nothing for us to do, right? There's nothing for us to do. I mean, feel no type of way about it. You get what I mean? I see where potentially, the subs was at, right? But nothing that for me right now, I would put money behind or put risk behind, okay? So I'm just watching them right now, okay? Just paying attention to the price action. Like here, post 950 macro, okay, we did have a 15 seconds entry, all right? And for post 1030, right, we had a 15 seconds entry here, continuation, both continuation setups, entries here, okay? But just collecting data on them for now, okay? Just collecting data on them for now. Nothing, like I said, nothing that I would put money behind. Okay, they're auditioning for me right now, okay? They're auditioning. Just like the 15 seconds, all right? He auditions for a while before he got a main role. Now it's a main character. It's got main character energy. Bless me. We're gonna wrap up here soon, okay? A lot of football going on soon, man. Alright, I'm gonna do a trade performance review just because I don't think anything is gonna happen right now in this price action for me. So what I did well today, right, is that I showed up, right? I got 1% better, gained experience and the lessons that I'll take into my next trading day, next trading session. Showed up today, right? And the trader, she did her job. She let the analyst lead. The analyst didn't see anything in terms of the chart for our setup for us to engage in, so we didn't engage in the price. And I feel no type of way about it, right? I showed up today and I did my job. So very happy and pleased with myself today, performance-wise. Why I fell short today, woke up at a decent hour, got my morning routine in, arrived at the desk, followed my procedures, my protocols, my processes, didn't deviate from it, or I didn't see anything that pertained to my model, so I didn't engage in any price actions, and I feel no type of way. So yeah, don't think I fell short anywhere today. Did notice a few setups that I could have partook in, right, but were iffy in terms of the time. Okay, one of them, all right, post the 950 macro here, fair trade. This one here, haven't really been framing entries on my liquidities. Okay, so that's something that obviously I need to collect more data on, and obviously based on the data collected, and we'll add it to what we need to do with that, right? As I collect more data, if it's something that I feel comfortable and confident in engaging in, I will engage in it. But for now, I don't have enough data on it really to actually. I do have enough data because they used to be a prominent factor in terms of my model, right? Using session highs and lows, but it's not something that I've recently been really paying attention to. I've just been using them as a draw on liquidity and not really somewhere to anticipate a setup from. But we'll be collecting data on them moving forward, all right? 11-11, all right, and see how those goes, okay? All in all, just to say, I don't think I fell short anywhere, okay? I'm a rambler, you know that. How can I improve for next day, next trading session is just keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I got going on, all right? Keep taking small steps in the right direction. Eventually, we'll get to our destination, right? And analyze the data, analyze the data, analyze the data. Backtest, 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 backtest. That's also me analyzing the data, right? I collect the data, I analyze the data, I extract the information I need to extract from the information, and refine what we need to refine in terms of our processes, our model, our procedures, and protocols, okay? That's what I've been doing. That's what's been leveling me up in terms of my trading, in terms of my analysis. So I just have to continue doing what's been working, what's proven to be working for me. And that's all I can do, really. I go here is every day to aim to be 1% better. I'm not trying to get to where I need to get to in one day, or I'm just taking my small time. Even though obviously I wish I was there, I wish it was quicker, I wish it was happening quicker, but I can't rush it. And I'm just trying to enjoy the process as it is, and just not let my current situations, my current predicament, cloud my judgment and influence what I'm doing, right? I'm just eyes on the prize and focus on where I'm going, my targets, my goals, and that's pretty much all I can do. Just keep showing up and working towards those goals and those targets that I set for myself, and that's pretty much it, man. That's all I can do. Yeah, solid morning session for us here. Didn't give us the opportunity to partake in the moves, and that's okay. Felt no type of way about it, right? Obviously, we saw two opportunities that we could have, right, with more data, right, and more experience and more confidence in those setups, right, we'll be able to engage in them. But for now, I'm happy to have been able to witness them, even though I wasn't part of the moves. I'm happy that I saw it, and now it's data banked for my head. Now it's something for me to continue to collect data on, so later on, right, we can engage in those setups. But other than that, solid morning for me today. No complaints about my performance or whatsoever. Let's go ahead and wrap this day up. Let's wrap it up. Before we wrap up, I want to leave you with this. I would finish a trade and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars: the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading. Happy bloody hunting. Remember, you only fail when you quit.